People make snap judgments based on a snippet of time. There is a new buyer that has come into the crypto market. The world needs an asset like that.
This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history.
There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Something that really made Bitcoin stand out was that it was not correlated in any way, shape, or form to any other traditional asset. And correlation just means when one asset goes up, another asset goes along with it, or one asset goes down, another goes up. So a prime example of correlation is the dollar and gold prices. When the dollar strengthens, gold goes down. When the dollar weakens, gold goes up. That's called an inverse correlation. So Bitcoin has been a great asset for a long time because you didn't have to worry about it being correlated to something else. We didn't have to worry about it if the Fed decided to jack up interest rates or lower interest rates, it wouldn't matter. That has changed over the last 2 years. And the reason I believe that has changed is because there is a new buyer that has come into the crypto markets over the last 18 months, 2 years, and that is the institutional buyer. And so to understand the institutional buyer, you need to know how the institutional buyer makes their decisions. So they view Bitcoin as simply an asset to trade. They are not true believers. They are not bought into Bitcoin as a store of value. They are not bought into Bitcoin as a rational monetary system. They could care less. To them, it's a trading pair like dollar yen or dollar euro, or trading metals on the London Metal Exchange, or trading gold futures. That's all it is. It's just a way for them to trade and make money. There's finally enough liquidity in there where they can trade it. And so the way they allocate their capital to different areas of the market is dependent upon prevailing interest rates. So they use asset allocation models that say, when interest rates are low, we will allocate more capital to what we call risk-on investments. So that's things like high growth tech stocks, venture capital, companies that don't have earnings yet, but have tremendous possibilities, and Bitcoin trading. They view Bitcoin as a high growth tech stock. And they do that, one, because that's just the way they're trained, but two, their understanding of Bitcoin is extremely immature. This is their first cycle in the Bitcoin market. Many of them have only been involved actively with trading Bitcoin for a year or two. So they are just beginning their journey up the learning curve. And so in the beginning, to the man with a hammer, everything looks like a nail. If you're a capital allocator, this just looks like a crazy volatile trading instrument that your traders can make a lot of money on. So over time, their view on Bitcoin will become more nuanced. This is what I believe. And they will start seeing the value it has as an inflation hedge and as a hedge against out of control, reckless money printing. But we're not there yet. That'll probably be in the next cycle, which is 2024, 2025. We're just not there yet. And that's another thing people look at and they say, oh, Bitcoin was supposed to be non-correlated. Now it's correlated. It doesn't have value. So people make snap judgments and long-term pronouncements of judgment on an asset based on a snippet of time, not realizing that the narrative surrounding an asset, especially a new asset, changes over time. It grows and it matures. You have to remember that the narrative around Bitcoin when it first came out was like, oh, this is a cool collectible that we can trade back and forth. Then it was, oh, this is the greatest way imaginable to buy illegal drugs on the internet. Then it was, oh, this is the greatest way to launder money. And then it was, oh, hold on a second, this is actually kind of a cool way to get money to people that are in really repressive regimes. And then it was, oh, hold on a second. This is a way where we can actually preserve our buying power when our local government is diluting our money so much. Inflation's running at 100% a year. Then it was, oh, hold on a second. This is actually a tradable asset that has value and can potentially be used as a store of value. And so on and on and on, as the time goes by, the narrative around Bitcoin matures and it changes. Now, ultimately, I believe Bitcoin will be viewed as a core asset that is held by funds, institutions, and even central banks. I believe it's destined to become a reserve asset. But that's not going to be for a while yet. It's going to take a while for that to happen. And so I want everybody to know that I don't own Bitcoin for what it is today, because what it primarily is today is a trading asset. What I own Bitcoin for is what I believe it will grow into. And it's the same decision that investors had to make in 1986 when Microsoft went public. Here's Microsoft saying, oh yeah, we build operating systems for computers. Well, 20 people had a computer back in 86. I'm exaggerating. It was a tiny number. And people, skeptics at the time would look around and be like, well, this market is tiny. Who's going to buy a computer? Who's going to take the time to learn how to use a computer? Who's going to operate a computer? Bill Gates was out there saying, in short order, everyone will have a desktop computer in their house. And people thought he was insane. They thought he was insane to suggest that. Yeah. And so what I have said is that at some point, billions of people will own Bitcoin. Billions of people will operate on the Bitcoin network. Governments will use Bitcoin to settle transactions with other governments that don't trust each other, and that ultimately central banks will hold Bitcoin on their balance sheet because it's an asset that's nobody else's liability. It's an asset that you can't make more of. It's an asset that you can't influence in any way, shape, or form. And the world needs an asset like that.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.